Hello, how do you do swing trading daily chart analysis of large cap stocks if you are using long optional line swing trading strategy? To illustrate how you can do that, we have stock watch list that we open. It's good to have a stock watch list that you swing trade from, and we have ours here. We are going to analyze 3 stocks from the list, and the first one is BKNG. You use a daily chart to do your swing trading, the chart analysis to buy stock and to sell stocks. So BKNG, you can use either maximum daily chart like the one we have now, or you can use 1 year daily chart. And 1 year daily chart might make the chart bigger for you. You can see the 52 weeks low, the 52 weeks high, but if you have low uptrend line or support line, you may not see them if the stocks didn't touch base with that trend line during that year, because it's going to show you 52 weeks time frame. So we are going to go back to maximum daily chart. Maximum daily chart, and maximum daily chart can show you your trend lines because we are using long uptrend lines in trading strategy, and you can see a big picture of the pattern that the price is tracing as well. So BKNG, we have this trend line that we like to buy at next. We have some lower ones as well that we didn't color, but we have it in mind. And right now, comparing where the price is to that trend line, the price is still far away from it. Yesterday, March 3rd, 2025, the price went down. So we can go to 1 year daily chart, or we can zoom. And you can see the red bar. And red bar just means that the price yesterday at the closing of the day was lower than the price in the morning when the markets open. And a green bar means the price at the closing was higher than the price in the morning for that day. So it reached a new high and since pull back and start going up and pull back. So we are just going to keep observing it, and at this point we are going to extend this trend line, keeping an eye on where I circled earlier. That's why we have a touch base that we can see and go from there, but it seems to be following a short uptrend line here for the time being. The next one we'll analyze is BLK. So because we want to buy around this trend line, there is nothing we can do today for it because it's now close to it. So BLK, yesterday, February the 3rd, the price went down as well. But we can go to maximum daily chart to see. You can see that it does make a tall mountain, so therefore we could expect this to fall back to this trend line at some point. So for that reason, we don't know when it's going to do that. Therefore, we don't really want to enter at a higher trend line. So we color this one to just wait on it. It has been, when it touched base with it, it has not touched base with it for a while. And as you can see, when it touch base with the trend line and start going up, it can follow a higher trend line. Like for the upside of the mountain, we have that here, and we don't know if that trend line ended already or not. So by just looking here, it touched base with it, touch base with it, touch base with it 3 times before it pulled back. If we are looking here, 1, 2, 3 and it pull back here. So we don't know if it's going to continue again or if it's going to follow this pattern and start working on pulling down. But either way, we just prefer to wait at the lower trend line, the valley of the mountain, so that when it reach it and start going up from there, we could get in. So this is now ready for us to buy yet using long uptrend line swing trading strategy, just like BKNG. Both are now ready for us to buy. The last one we'll analyze today is BRO. BRO, and I will need to take this highlight out of there because we sold it last week or so. The highlight just means we have it in the portfolio, but since we do not have it anymore, we will need to take the highlight out of there. So BRO, and we recorded a video just for BRO that we published last week as well. So it's still going up. Yesterday the price was higher. The price went up yesterday, but we purchased it. You can see the arrow there. We purchased it, and when it reached a new high, we sold it. So you can, it does make a wide mountain before touch base with that trend line and touch base with it. In 2024, we traded using short up to launching trading strategy, and toward the end of the year, we bought it at the trend line and then it went up. So we noticed that, let me trace this here. That is the upside wall of the mountain. It gradually goes up. It does not do like a tall mountain like that, but it tends to go up and then pull back. So it did it here, and I think it tried to do the same thing here. So at some point it might pull back, and I don't know if it's going to try to pull back to this line because this line originated from somewhere here. So it will be the line that we will want to buy at next time it pull back to it. But again, there is not much distance between the two. So, but we'll just keep an eye on it. If it reaches that line, we will see if it's going to go up from there, or if it's going to try to, come down to this one. But we will try to buy at either one of those lines. If it does not rest on those and want it to come lower, we have those back up as well. And those are the lines that we chose to buy at if it pull back to those valleys and start going up from there. We can go to 1 year daily chart to see it closer. So it pull back and start going up. We have a higher lows. We have higher low. This one is the bottom of it is higher than this one. So we had traced a small uptrend line there and bought it at the second green bar that followed a pullback. But again, it was not done. So it pulled back, went up, pulled back to the trend line, remained there for a while. I traced this one to see what's going. This low is higher than this one. So this is another entry point there. But then it pulled back, but those prices were higher than this one. And then they went up. And again, this low is higher than this one. So this is another entry, those two bars there. And then it pulled back. So if you bought it here, those two pullbacks, you'll be negative. So this low automatically void everything that came prior, in the sense that it is lower than this. Yeah, it is lower than this one, or yeah, lower than this one, but still higher than those. So when I bought it there, here, At some point here, it was positive in my account, but for this session, it was negative. We just kept it because you can see the price is on the y axis from 0 up, and we have the date at the bottom. So we purchased it in December, and you can see where my mouse is. Any bar below that for that time frame more than a month, it was negative in our account. But then it became positive in our account, and then negative around this area, and took off. This higher is higher than this one, so those two are entry point as well. So as a large cap, upward large cap, when they pull back to a low uptrend line, support line, some of them can do well around that area for a while. If you miss one entry, you'll have occasions to catch others around that area. You'll notice that I enter a little bit early, but having experience with this stock, because we bought it multiple times using short uptrend swing trading strategy, we bought it there, I sold it here, we bought it here, we sold it there, and then we bought it here. So when we bought it here, it went up, pulled back, went up, and then pulled back on us all the way here. So when it was close to the trend line, we bought it again, because we bought it before close to the high, and it pulled back on us. So when it was close to the trend line, we bought it again. So because we bought a higher level, I won't want to sell it until the price is higher than this first purchase that we have in the portfolio that we didn't sell by the time we bought it the second time. And so you can see that you have entry point, another occasion here. So you have 2 days here to enter after this pullback. You have those sessions here that we have 2 days here, we have a day here, so 3 occasions, if not 5, because you have 2 together, 2 days, 2 green bars. The first one, the second one, if you meet the first day, you have the second day, then you have this one. And then it start going up. If you didn't catch it, or you caught it somewhere around this area, after this pullback, you have a green bar. That's another entry there, or this one to enter. But at this point, it was a little bit away from the trend line, but still have options. But so those are entry points around this trend line, around this long uptrend line, and that is what long uptrend line swing trading strategy is about. You find your long trend lines. You start with maximum monthly chart to trace your trend lines at the bottom of the chart, touching their obvious lows. You move to maximum daily chart to adjust those lines that you trade on the maximum monthly chart, to adjust them and to trade some more, touching the higher lows, and you pick some to be your entry point, and you just wait. When the stock pull back to it and start going up, and you start seeing higher lows, you buy at the first or second green bar that follow a pullback, and you just wait, and that is your entry point. So every day you do your daily chart analysis of the stocks on your portfolio to see to compare where the price is to your entry point. And when the price is close to your entry point, then you start seeing if the lower lows, this low is lower than this one. This low is lower than this one. So you are looking for higher lows. Once you start seeing higher lows, you know that your lower lows ended. The stock maybe stop going down. The price stop going down and is getting ready to start going up. After you have about 2 higher lows, I'm gonna say 2 higher lows like this is higher than this one. That's pretty much one. This because this is a cluster of days that it was low after days. So you want your lows to be delimited by the green bar. So this low, you will compare it to this one. You see those two, it's not this one you will compare, but it's the second one you will compare to this one. So you have a lower low here, temporary one. Then you have this low that you compare to this one, not to this one, but to this one, because that's those two are consecutive days. You will compare it to the last day of the two. But once you start having about two higher lows, you know that maybe it's done going down, and you can start looking for a green bar that will follow a pullback for you to buy the first or the second one. And then you wait and you continue doing your daily chart analysis, comparing now where you enter or where the price is to your next exit. And for upward large cap stocks, you can set your next exit to be the next high. So next time the price is going to be higher than this level, is going to be a new high. So our exit, we just know that this area was the previous high, and we have a purchase here, and we know that we won't sell it until it passes that area. So when we are analyzing it almost daily and it reached this area, we have a new high, we exited there. It was our exit point, but then it continued. So the goal is not about maximizing the profit, it's about locking in some profits, because instead of going in, it could pull back like the way it did it here. Therefore, by trying to stay in to maximize the profit, which you could have done, you could also lose it as well, unless you have more information that you are working with to determine if it's going to continue going up. And since I do not use other type of analysis but just the chart, a new high was good enough for me to get out, because I didn't really get in at a very low uptrend line. I got in here and I got in here. So a little pullback here could automatically pull this back in the negative. Even though I will be profitable because of this purchase, price could easily be lower than this, because when I put my bar here, you can see that it's crossing this one here. You can see my horizontal line. So I was pretty much 2 bars away from going below this bar here where I purchased it the first time. So it was good enough for us to lock in some profit. So this is long uptrend line swing trading strategy, and when you are using it, you can combine that with short uptrend line swing trading strategy as well, but one step at a time. So this concludes how you can do your daily chart analysis for stocks you want to swing trade if you are using long uptrend line swing trading strategy. Just start small and grow from there. We thank you very much for your time. We thank you very much for all of your comments, and we thank you very much you all that subscribe to our channel. Thank you for watching our videos. Having a stock watch list just allow you to analyze chart from your watch list. Have a watch list of stocks that you can analyze about an hour every day to just review them. If you find something that you can buy the following day, that's great. So you do your analysis at the end of the day when the market close or early in the morning before you go to work. But if you do not find anything, that's great as well. Thank you. I'm Afiavi Liberman, host of Liberman Consulting L.L.C YouTube channel, and in sub.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. It's very important you invest in the stock market and or you swing trade. If you have a job, Don't make your job the only source of income you have, because it is not your business. Therefore, you want to diversify your portfolio. If you do not have a time to have a side business, know how to invest in the stock market. Know how to swing trade. If you are looking at BRO here, there is where we exit. That bar was a new high. When we purchase it there and we purchase it there, that day was a new high and we exit. We have a narrow there, may not be quite obvious, but it's there. And it's good. You can screen capture certain things, that because once the price went past that area, this new high won't remain there. So I took a screen capture for reference purposes, but it's there. And investing is about you having a job that is generating a lot of revenue for you, and you are taking some money there and put in the stock market to let it sit there and grow in value. But to touch the money, you have to sell some shares. And swing trading is about generating cash flow. So if we look at BRO, for instance, if you are investing in this is an uptrend line. Let's go to maximum monthly chart. You see, this is an uptrend line, so it goes up. But here is the things though. If you are investing in a long term, it's going to be following. So we do have this that I didn't trace because I don't think it's going to come to this trend line here. And that's how you trace your lines. You start on the maximum monthly chart. But if it's going to come back to this trend line, which is an oblique line as well, it's still going to go up. So if you are putting your money, if you are investing in the stock, you are investing long term in the stocks, and you sell it, let's say you invest it somewhere here, you sell it, you are still going to make a lot of money. You know, from where you purchase it, you can see my mouse there, the price is somewhere here. And you sell it, years later, you are going to make profit. Or you sell it around this trend line or whatever that trend line is, you are going to make profit. So when you are investing in the stock, what I wanted to say is you are is going to increase in value. When you sell it, pretty much you are accumulating it's going to increase in value. You are accumulating a profit there along the trend line. That's what I wanted to say. You are accumulating the profits along the trend line when you are investing in stock long term. When you are swing trading, you are cash flowing the fluctuation, the bump away from the trend line. You are cashing them in, creating a cash flow out of your investment. And yes, when you buy it and you sold it, you lock in this bump here because it was away from the trend line. You lock in that increase before it pull back to the trend line. Keep in mind that when you are buying it here, you'll be buying it at a higher price compared to here, and this cash flow that you lock in will offset that increase as well. And while you were out of the trade, you can use that money to buy another one at the trend line and sell it at, when you reach a peak and pull your money. So pretty much you are avoiding being in the trade on the descent from the mountain to use that money within that time frame to invest in another stock. And when you reach the trend line and start going up, you buy it again. So you are locking in those increases instead of just keeping your money there to increase the value of your money along this trend line. you are locking in those bump, and some stock can have a higher bump. If we do BLK, do you see this big bump away from the trend line? If you are investing long term, you will be increasing your money along the trend line slowly but surely. And if you are swing trading at the same time, you will be locking in this bump away from the trend line in, and then you lock it in and you get out, and for almost a year that it has been on the downtrend, you can use that money for that time frame to buy another stock to cash flow there as well. And when you get in again, it's going to increase in value, and depending on how long you stay in the trade, or you can even lock in some, rebuy it there, lock in some, rebuy it there, and so forth. Just catching it at the trend line gives you perspective, knowing how long you can stay in the trade, even if you are combining the long and the short option swing trading strategies together. Not to stay in the trade the whole time because of the upside of the mountain wall trend line. You see this mountain? You have the upside of the mountain wall. It has a trend line there, a short up trend line there, that you can use short up trend line swing trading strategy to buy at that trend line, sell it at the peak, buy at that trend line, and so for a few times, and just not do it because you don't know when that will end. And when you touch the long up trend line again, you can get in there. It all depends on the type of stocks you are trading, that you will see if you have a chance to combine long up trend line swing trading strategy and short up trend line swing trading strategy, because the one that are doing a wide mountain or a taller mountain might give you occasions to combine both strategies. And some that are not veering too far away from the long up trend line, you might just prefer to stay in it. When you catch it at the valley of the mountain, you might just prefer to stay in it until you reach the peak and you get out. And by just trading the same stocks over and over and over, you familiarize yourself with their chart, with their price movement, and know what to expect from them. At least that is the goal. That's why it's good to have your stock watch list that you just trade from, and once a year, at the end of the year, you can see the one you didn't have a good experience with, that didn't really align with the strategy you are using. You can take them out and use your longer list of stocks to swing trade to find some that are not in your list to replace the one you took out. And over time, you'll just have your watch list of stocks that you just trade from. There is that with long up to long swing trading strategy, we do not swing trade often. If you have a job, long up to long swing trading strategy works well for you, because some days you are not going to trade, therefore you are not going to have a lot of transactions to record either. But you just do your daily analysis on a daily basis, and some days you might have a lot to trade as well, but it just gives you some flexibility as well and work well with a busy schedule, in my opinion. But it's good for us that are employees, full-time employees, to know how to invest in the stock market, to know how to swing trade stocks as well, so that we can do those, outside of our job, putting some of our hard-earned money in the stock market and make that money works for us. Thank you. And I'm not sure if I said that, but yes, we share different ways to make money, and we share different ways to save money to reach your financial independence, where you do not depend on an employer to provide for your family. And again, swing trading is one way to make money. If you are looking for ways to create your own watch list, how to handpick stocks for your watch list, we have videos related to that. Will you please check the playlist links in the description of this video for that. And we have playlists for it, and we have other swing trading related videos playlists as well. Thank you for your time.